The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, this is Basil Chapman, host of the Tiger Technicians Hour at noon Eastern Time every day, and sitting in, whoops, let me just get there, sitting in for Larry. Larry's away for a day or two, and it's my pleasure to be here for him. Of course, these are difficult shoes to fit into because Larry does so much. Let me show you that the E-mini is up 8.25, bouncing into resistance from about 7 o'clock last night. There was resistance in the 2654s. It's at 2652 right now. So just make it real simple. If there is a move in the E-mini that can hold between about 10 past 11 Eastern time and about 12:20, maybe 12:40, maybe for an hour and a half at a +8s, in other words, at 2653 or higher, that would portend at least a nice up close will be a change. Now, one of the things we've looked at for a couple of days now is that the futures have been higher early in the morning. In fact, they've been sometimes very much higher, and then there's been a reversal. There was an 800-point Dow reversal just a few days ago after a spectacular 150-point or more move to the upside in the Dow. So we've got to be careful. The level to watch on the support, just on the very near term, on a 10-minute chart, I'm looking at the 2646s. So it's about 6 points down. If it gives up the gains, in other words, at about 10 past 10 this morning, that's just not going to be very good. All right, let's get to the nitty-gritties. The E-mini daily chart has 2660 as the 9-period exponential moving average. Of course, Larry doesn't use these moving averages. He has fabulous other techniques, but I like to use them because it gives me very good parameters to watch for. It gives support and resistance. Look at the way the 9-period moving average, this black line in the left chart, the daily chart. Look how it was incredible resistance when the E-mini broke down on the 19th of March with a high of 2756. Next thing you know, it's down at 2552. That was the low of just a couple of days on the 2nd of April. And now it's been running up. And now that black line, you've seen it was support, becomes resistance again. So it's this oscillation between the above the 9 EMA and below the 9 EMA that for me is very important. I won't talk about the other things other than to say that 200-period exponential moving average, the orange line at 2618, became very good support yesterday. It snuck underneath it, but it closed nicely above. Market-wise, the weekly chart is saying, ho-hum, we're in a trading band, 2700 to 2715s is probably the upside strong resistance looking out, and a break under 2600 starts heading towards the lows again that we saw in February. All right, let's just make that clear. And now the 120-minute chart of the E-mini has much narrower parameters. 2654s starts a breakout, go to 2655s, and then all of a sudden the 2665 200-period moving average could become a magnet, but it has to hold there for at least an hour and a half. I would even say it has to hold in the 2659s for the E-mini. And the key support on the day is 2646, the 9-period exponential moving average in the 120-minute chart. All right, enough with that. Let's get to the nitty-gritties. Here we go. Move that away. 120-minute charts moved out the way, and here we go. The Dow is not acting as well as the E-mini. It is up 35 points, up 0.14 at 24,111. 24,271 up there is the 9-period moving average resistance, and certainly the 24 I would say the 24,050 level today would be key support to hold. Let's go to the QQQs now. The NDX 100, I'll go to the futures because the futures at this particular time are a little bit stronger. They're up 0.75, up 49, 0.75%, up 49 at 66.05. 66.36 is the 9-period exponential moving average resistance. That's going to be absolutely imperative to cross over and to hold for at least two 120-minute charts, and there's 240 minutes. But I would like to rather say two 120-minute charts out of 3 consecutive bars. All right. Now, a couple of things that are going on is that the overall, the major top that was made in the QQQs, which is the trading vehicle for the NDX 100, on the 13th of March at 175.21, that gave a perfect peak D. That's what we always look at for in the Chapman wave methodology, both in the in this case in the daily chart. Some other indices did the same. There was an island reversal. It plummets down from 175s down to the 153s, bounces to the 166s. Yesterday it went way down into the 156.47 level. This is serious stuff. So if I had to draw in a trend line, I'd say that this trend line right here for the coming week and a half, it's going to be imperative that if the Qs are going to have a rally of substance, that is a rally that's sustainable, that can last for more than a week and a half, 2 weeks, it needs to cross decisively, and pretty soon by Wednesday or Thursday of next week, it needs to be above this downtrend line trading the 165s. Just trying to make it as simple as possible. Any break below yesterday's low would target the 154.80s, which is the 200-period moving average. Now I want to go to gold. Gold is up $3 at 13.26. Little inside bar we're looking at right now. The technicals, the MACD and the stochastic, once again, Larry doesn't use them. I use them a lot, are very negative. The weekly chart is just in a trading band. The trading band is between the 13.12 area and the 13, I would say 13.45 to 13.53. And it's just stuck between that range. When it pulls back, it looks horrible. When it rallies, it looks great, but it's really stuck. And if you look at the monthly chart is still holding pretty well. If you're looking at silver, silver had, I have to consider this, and I discussed it in my show just the other day. I said everything about it suggested it was a short squeeze because it did it by itself. It did not have gold rallying with it, and it spiked up into the 1740s. Should have been great action. It should have only pulled back to the 1705, 16.85 area, and then bounced to a new recovery high if it was really breaking out into a new bull phase. So I just think it's stuck in a range right now, but it better hold 16.40, and it's at 16.61 right now. If I'm looking at platinum, let's just do that quickly. Platinum is pulling back, is making this arch formation, lowercase h. If platinum closes decisively below 910.30, let's call it 910, it's trading at 914 right now. That's just not going to be very good. I'll do high-grade copper. I need to do a lot of work to show you in the bonds. And the other thing that I need to talk about is the semiconductor index should lead the way up if there's going to be a rally today. I'll be right back. Basil Chapman sitting in for one and only at Larry, Pennsylvania.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. So we're looking at high-grade copper. This is Basil Chapman sitting in for Larry Pesavento. If you thought his voice had changed a lot, certainly has. Now you're looking at high-grade copper. Look at this little flag formation here, little pennant right there. So just to make it real simple, high-grade copper trading at 3.13, up a fraction. If there's a break to the upside and it goes to 3.18, 1.85, that would be very good. But this particular pattern, there are a whole bunch of theories. My theory is that it has the propensity to turn into a rectangle formation or an arch formation. So the rule of thumb, technical analysis would say a break of this downtrend line to the upside, this left side chart is a daily. And look at the weekly chart while I'm talking about trend lines. Look at how important this trend line is. It hasn't closed above this downtrend line, the weekly, since that top was made back in late 2017. So now what we're looking at is if it goes towards the 3.17 area, then what we're looking at is the very next peak, which is at 319 on the 24th, that would become of April. That would become a target. The books usually say break to the upside would take you to the top of the flagpole. I've just done this too many times. What happens is that there's another pattern to me that's way more important, and that's the arch formation. And that arch formation says there could be an inside move within this rectangle or the triangle, based on the shorter term time frame, and that would be the 120-minute chart, that could take you even to a peak D, the fourth highest peak, and that would take you just under, exactly to, or just above that previous flagpole high, the peak E that was made, and then it should come back down into the middle of the pattern again. If it can't break and hold above the trend line, then you're looking at the support as being very important. I consider when you're coming from the bottom to the top, a break of the bottom support level, in this case, the low of the 23rd of April at 3.101, that's the one that says you break that copper, you go underneath that, and that 200-period moving average of 3.08 becomes an immediate magnet. But in the meantime, copper's holding okay. That's what I wanted to say. If you're looking at Now we can go to the dollar. The dollar, which is trading right now down a little bit, down 16 cents at 91.06, made a high today, a recovery high of 91.32. For those of you who know my work, those Ds are, look at this peak D here, the fourth highest peak in the monthly at 103.82 back in January of 2017. Look where we've been. We've already been to the 88s, bouncing now to the 91s. So those Ds are dynamite. So we're looking at the weekly chart, still very strong. I like the dollar. For my subscribers to my opening call, we're long the dollar, been long for some time now, since the 6th of April. We did it long a few times, but the last one was 6th of April via the UUP, a lousy vehicle, but that's all you've got if you want to trade the dollar, not as a futures, but as an ETN or as a fund. So right now, the support level, there's a theory that I have. It's based on the Chapman wave cup formation, and it's called the cup and ladle breakout, but there's also a left side, right side price time match. And it says if you take out the left side high, in this case the high of 90.93 in this cup formation, and you break above it, you should go to at least, so without the little handle, you know, cup and handle is a very famous pattern. Investors Business Daily, they talk about it all the time. Not one of my favorite patterns. Not that it doesn't work, it's just you better recognize it immediately in that little handle formation. Otherwise, you've lost the best move, because it almost always, after the handle breaks out, comes back again into the handle. This cup and ladle is a powerful, powerful indicator. The stochastic's at 89%. The MACD is good. This says, yeah, you should have a very quick dip, maybe hit the 90.93 left side lip, the breakout, and then you can even go a little higher. So far, the daily and the weekly chart are very strong. The 120-minute chart right here in the corner, the insert, has made a peak D at 91.32. Now it's having a bit of a rest. As it has a bit of a rest, I'm anticipating that maybe gold could have a little bit of a bounce. I just think it'll be a little bit of a bounce. Look, Goldcorp came out with earnings today. It's down 20 cents at 13.75. They were disappointing. I believe Newmont Mining also was a little disappointing. It's down 6 cents. Also made that peak D right there. So gold stocks are not breaking down. But what's interesting is that the dollar is acting pretty darn well. And the euro has pulled back, a little candle move to the upside. You remember that arch, the pattern that I was talking about, that cup and ladle? Well, look at this. The euro broke its left side low on the 1st of March of 1.215. Today, it went down to 1.214.37. This candle is very important, but the technicals are very strong in the dollar, so the technicals are very weak here. I suggest that this rising trend line right here, that's going to offer a lot of resistance. It's right at the 9-period moving average of 1.225. If it can bounce, that's where the bounce will be. Very important couple of days. And what's really important about it is now we can go to the, this is the TLT, the iShares Treasury, 20-year Treasury bond ETF. It's trading up 57 cents at 117.73. The left side low is down at 116.51, made in late February. And now we're trading a little bit above that. From the power of the move down and the technicals, the TLT seems to me to be headed lower. The TBT is only in a leg B to the upside. It is a gray B, meaning it's underneath the previous high of peak D at 39.86 made on the 21st of February. So this is a retracement mode, but this Chapman wave squeeze between the stochastic at 92% and the MACD with a huge price movement is extremely positive. When we get back, I'll show you the 30-year, 10-year, and 5-year yields, the weekly yield that I always show my subscribers to my opening call, my daily newsletter. And it looks to me like yields want to go higher, and it's going to be very interesting. So Dow futures are trading right now at up to only 25 at 24,103. The E-minis come back from its high. It's up 6. It's still okay at 2650. And the SMHs, the semiconductor index, is up 1.73 at 98.43. Extremely oversold in a serious intermediate term sell mode. I'm anticipating a rally that's probably going to be led. It needs to be led by the semiconductors. We'll also talk about the home builders when we get back. So I believe we're about to go to a break. We're real close to the opening bell. Basil Chapman sitting in for Larry Pesavento. Trade what you see. My service is the opening call. That is the daily newsletter that comes out every day, early morning, starting at about 6:30, 7 o'clock, sending out my charts and all our positions by 8:35. The final newsletter page goes out, and that's got all the things we look. A little summary, paragraph summary of what we're expecting, and then all the bullet points on what we're looking at, why we're looking at it with charts. So Basil Chapman sitting in for Larry Pesavento. And the E-mini is up 6.75. I'll be right back with the opening bell. Binga bonga bonga. I'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Trade What You See, Larry Pesavento's show. I'm sitting in. My show is usually at noon Eastern Time, Basil Chapman. And Dow's up 86, just an explosive move to the upside. An up move, explosive as if it was about 200 points higher. So up 90 in the Dow cash, up 13 in the S&P. But look at the bonds. So bonds, for what I said to subscribers this morning is that I believe that there's, on a shorter-term basis, near-term basis, there's a real good chance that the dollar pulls back a little bit here, Yields take a bit of a breather, and here we are. The yield 30-year is down 29 cents at 31.80. It missed making a leg D in the weekly chart at 32.22 by just, look at this. The high yesterday was 32.19. 32.19 in a weekly chart of a move that's gone on for 31 years in a down channel. It's actually more than that, but the actual down channel. And it's attempting to break to the upside. And all it had to do was go 2 cents higher, and then I would have got my leg D. With a leg E in the weekly chart of the 10-year, the white is the TYX 30-year yield. The brown is the 10-year TNX, leg E. I could call it an alternate count, but A, to start a brand new move to the upside, I need a lot of evidence for that. And an F in the weekly chart of the 5-year, the FVX, the 5-year T-note yield, the cyan-colored one. So I'm thinking that we could, in fact, make some little double top here in the weekly chart. Maybe yields start to pull back a little bit, give the opportunity to the TLT to actually have a bounce finally. That's what we were looking at a moment ago. Have that leg B go to a peak B in the TBT, and we pull back. I don't know how long. This is something I'm just saying is on the cards. Now, if you keep looking at these charts, you'll see that there was absolutely no respite in the 5-year. It just kept going higher and higher and higher. If you look at the brown one, the TNX, you'll see that there was like a little bit of a, you can call it a triangle with a flat triangle. The top part was flat, the lower part kept making lower lows, and then it broke to the upside, and yet you've got just a cup formation in the 30-year. If you go back and you'll see the other patterns, when there was a really quick move to the upside, then there was a bit of a digestive move to the downside afterwards. When it broke to new highs, that's the pattern that you saw back in February. No, it was March of 2007 of this year, March the week of the 20th. And then it kept coming down after that. This to me is a little bit different because what we've got is, yep, there's a flattening of the yield curve, but what's really important about this, you see the cluster formation, you see the distance, the differential, or the percentage between each one of these is starting to narrow to the point where, wait a minute, why would you buy a 30-year at 31.81 then when for just a little bit lower you've got 2.9 on the 10? But even just a little lower than that, you've got 2.82 in the 5-year. Look how close they are. I mean, of course, if you're using huge amounts of money, that's a big, if you countries or states that are buying, bonds or whatever it is, with this kind of yield, then it does make a difference. But look how narrow it is. So that's one of the reasons why I said about 4 or 5 weeks ago that there's a chance, and it doesn't happen immediately, but there's a chance that it'll be the yields that add just another dimension. It alone cannot do it, but adding yields to home builders that are very weak, if they cannot rally here, because Toll had very good earnings, Toll Brothers, Pulte Homes, Pulte Group had good earnings. If they can't push to the upside and just ignore it and say, we just can't sell, we are having problems, that's going to be a big deal. So you put all these little facets together. Now here's the other facet that's really important. And that is, I don't think I heard many people at all, if any, people talking about dollar rallying and affecting problems for the multinationals. And that could be an issue. So the dollar at 91.05 right now, down 17 cents. Yep, should have a little bit of a breather. The technicals in the daily, the technicals in the weekly, and for the very first time in, I couldn't even remember how long, the monthly chart is showing a little bit, enough strength to say this rally could last a little longer. Now, for those of you who ever deal with currencies, you know that currencies, when a trend starts, it can stay in that trend for a long time. Look at the USD JPY, the yen, the dollar-yen currency pair. It's broken out to the upside in a leg D. It's gotten real close what I'd said to my subscribers and to listeners to my show. that the 109.50s, 200-period exponential moving average, the closer we get, the more it wants to tag it. That's just the way these things work. Look, you don't even need to look at a 200-period moving average when it breaks down or breaks up. Once it's gone up, it can continue for quite a while. But when it breaks down, you have to wait and wait and wait. And when it gets close, boom, it's nice to tag it. So the technicals are very good for the dollar right now, also for the yen, and it's acting very well. Once again, here I think a bit of a pullback, little hiatus in the move to the upside. This is a huge move from under 107 to over 109 in just a couple of weeks. I mean, that's big. All right. And not only that, the weekly chart is just tagged the 200-period moving average. The MACD is cross positive. The stochastic is improving. The relative strength, the RSI. Yep, I think these things are going higher. Now let's do something else. I want you to talk about crude oil, CL. Crude oil trading right now should be down. Well, it's up 37 cents at 68.42. The reason why I said it should be down is it had a bit of a move yesterday. It held the 9-period moving average. My thinking was crude oil is held very well. It should be in the same as the dollar and the yields. It should have a little bit of a rest here after such a spectacular move. Hey, it doesn't have to listen to me. It doesn't have to look at the chart. It's going to do what it's going to do. But look at the way the weekly had this cup formation, went to that leg D. Remember that leg D. But the weekly chart is only in a leg C right now, probably a peak C if it cannot break above by Friday's close above 69.55. That was the high last week. And that 200-period moving average is now acting as a magnet. Let me show you this in the larger picture. We haven't seen the 200. I'm going to squeeze this. It's fascinating how Larry always talks about numbers to keep in mind and patterns to keep in mind. Well, here's something to keep in mind. When the crude oil broke under back in August of 2014, up in the 119s, once it broke below that 200-period moving average, you didn't even have to mention 200-period. It was, there's nothing there. It was just something that it was there in the long distance as history. All of a sudden, it's become very important again, which means once it starts to close above it, you could see a chop, chop, chop above 68 into the 72s, and you could see tremendous support in the 65 to 63s. I'm saying to you, crude oil looks like it's going to hang around here for a little while going into the summer. I'll be right back. Basil Chapman sitting in for Larry Pesavento, and we'll look deeper at the market in a moment. And the Dow is up 65.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Hi, folks. Yeah, don't forget, stay tuned for Tom and Tommy in the Bull Bear Binary. That show is really amazing. There's some things they discuss, the way you can plan your trades. It's really fascinating to be able to have your parameters just outlined so clearly, and to give you the entire, well, it depends on how much time you want. You could trade very quickly to the hour. You could trade for a day. You could trade for a week. It's fascinating to do that. And I love listening to that show. So let's look at the market itself. You've got, we'll go to the Dow for the moment. Look, the Dow at this particular point is struggling. It's up 77 at 24,162. The MACD is actually negative. It's trying to make the M-shaped formation to try to rally back up again. It should do that after so many days of down moves. But what's really interesting is the stochastic is so weak at 43%. The blue line, the on-balance volume, this is Joe Granville's famous technique that was eventually put into a software package so that you didn't have to just read these numbers of adding 1,833,423 shares to the previous day's total of 963 million. It just became impossible. I used to do that many, many years ago, and then eventually the software came out. And now I love to use it as a waveform, just a closing price waveform. Look, it went peak A, B, C, and then pulls back at that peak B in the Dow at 24,858, pulls back. It's trying to rally now, shows a little bit of strength, a real mixed market. Actually, I prefer this to the gap ups that go down 100 points within by 10 past 10 in the morning. This is just 15 minutes. We'll see what happens after that. It's not strong, but it isn't breaking down yet. So what's really important is that within the context of the markets, this H pattern, I like to talk about fighting patterns. That is this arch pattern, and then the cup pattern, and then another arch pattern within a cup pattern. One of them is going to win. And then I also like to draw in channel lines, because those channel lines give you tremendous support. Look, if I draw a parallel line to this one over here, it comes in at exactly yesterday's low. Just within the day before and yesterday's low of 24,828 and 24,823 yesterday. So this, if ever there was an opportunity to rally, this is it. But that very big ugly candle of Tuesday, wow, you've got 9-period moving average of 24,301 you've got to overcome that. You've got to be above it, and you need speed, you need time. So this is a very important moment. Now, I want you to do something else. Just because it's Larry's show, and Larry is always in all the different futures, I wanted to show you feeder cattle. Just out of the blue, I'm going to pick up feeder cattle. It's made a peak B in the chart wave daily. It is attempting to rally. You see this little cup formation right here, or a little V-shaped formation within the larger context? I'm going to do this just for a moment. I'm going to give you the previous reversal pattern right there. All right, and we'll go to this bar, and then we're going to move it to the right. give it an equal number of bars to the right. And it says, well, we've already gone by it, so that's useless. Let's go to the next candle of importance that's there. Let's go on. And it says, if feeder cattle trading at 141.75 is going to rally, it's going to rally and hold and help the weekly chart to improve a lot. It's going to break from 141.70. It has to close above, not close, get over. It has to close sharply above 142.65, the high. This is the continuous contract, above the high of the 16th of April. And of course, this is barbecue time. So this is not very good action. And that would suggest to me that if it fails and takes that 140 support, that's a problem. It just says there's a lot of cattle out there. There's a lot of demand is being met, and there's no urgency. But once it breaks out, if it can trade in the next week, if we can get to 144, there's a real good chance that the 200-period moving average of 145.45 will become a magnet. Let's look at feeder cattle. I think I can go to CC is cocoa. Where's cocoa right now? Cocoa is in a leg C in a bull move. It's in a very strong move to the upside, and it's acting very well in the daily. It's in leg C in the weekly. Cocoa continuous contract. Leg C in the, here we go. Leg C in the daily, leg C in the weekly, and a leg C in the monthly. Cocoa is moving higher. Oh, those chocolate bars are going to cost a lot more. Yes, so at 2.909, the MACD is good. The stochastic's okay at 82%, strengthening, on-balance volume is very good. In the daily, the weekly chart is the one that's very impressive, and it's leading to the monthly chart acting extremely well. That makes the 2.70s key support for cocoa. I think it's KC. I want to look at KC. I haven't done any work. KC, yeah, this is the coffee continuous contract. I believe that's coffee. Yeah, coffee. This is a leg B, and it was with good technicals confirming, but it needs at 119.70. It needs to be. This is a peak B right here, 120.80. Next bar is 120.75 high. So you've got peak A, you've got peak B. Look at the number of bars. I love this kind of pattern for a breakout. But sometimes it's a breakout that goes back into the pattern just once because it doesn't believe it. Let me do this as a very, I just want you to, we're all about education here. So this is just something that I thought, I remembered this and I thought while I'm doing the show, this is a really good chart to show a couple of things. So you see that thick green, light green line? I'm going to make a channel. And I love when these channels come down in a fairly narrow range. And this is a fairly narrow range. The weekly chart is much more, the monthly is a very, very narrow range. But this has to be red, and we'll make it pink. And within this context is something else I like to do. I call it the Chapman wave inside, there we go, Chapman wave inside track. And that says in a channel, and it could be just the top channel or bottom. Sometimes it's the full channel. I'll explain what I mean in a moment. I'm just doing two things at once here. This has to be red. There we go. So now what we're looking at, within this channel, if there is a push to the upside in coffee, and coffee's able to get to the 121.50s, hey, it's less than 2 points higher. It should be able to do that if this is the start of a new move to the upside. This entire inside track with a very long-term down channel, I prefer it if it was narrower, says that you could get a 1-to-1 expansion. And let me explain what I'm talking about. To the upside, if there is a decisive break above the trend line resistance, that's now the green line, and it holds there. Okay, here, this is what I'm looking at. I'm very conservative in these things. I go from the low that was made to the next extension. So there's your 1-to-1, and I love if it's a Chapman wave parallel extension. What does that mean? It's at the same angle. This is different to when you get a 1-to-1. People talk about a 1-to-1. You're just talking about price. I'm not. I'm talking about the fact that it would move within a day or two. It would suddenly be right there by the 30th of April. It's trading at 120, 121. That would be very positive. Finding good coffee moving to the upside, that would help the weekly chart. Wow, is that a break? Another break coming up. Basil Chapman, Tiger Conditions Hour, Dow's up 54, S&P's up 8. I'll be right back to finish up the last segment for Larry's show. Basil Chapman, Tiger Conditions Hour, noontime host, sitting in front.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So, folks, I'm looking at corn, 2 cream corn fund. So it's holding very nicely. See that cup formation? Now you're getting used to what I look at. The cup formations, the arch formations, the left side, right side, price time match, that went to right there. It broke above in a quicker time frame. It's at a peak B in the weekly chart. What's really important is that it's holding well within a confined area, and that confined area at 17.90, down 5 cents right now, is between 17.55 and 18.55. And I think if we can go, 18.35. And if we can break above that 18.35, 25. I meant 1825. If we can close above 1825 to go to a leg D in the daily, that really helps the weekly chart. It starts at leg C. Suddenly the monthly chart for corn improves. So I just wanted to go through a couple of those things. Now, we have not looked at the QQQs at this particular point, up at 160.64. It's going to need a lot. I think the larger context for me is the intermediate term. Sell mode in the daily and weekly charts of the NASDAQ Index 100 remain in place. I believe that there should be a rally. That rally is going to stall at about the 163s, 165s, if it can even get there. Watching it real closely. IWM, which is the one I didn't get to today, the Russell 2000, is up 11 cents at 154.31. It's working real hard, but it's in the higher level of the whole consolidation. So watch closely at 154. A break into the 159s would be really positive. But if it closes under 152 in the next week, not good. I suspect there's upside bias to the market today. That's what I'm planning. That's what, for subscribers, that's what we're looking for. And I'll be back for my show at noon today, Eastern Time. Basil Chapman sitting in for Larry Pesavento. Let's just make it real clear. The VIX index has been right there. The VIX index is down 0.36 at 17.48. If, in fact, the VIX index can go to below 17.30 later today, that really gives a boost to the close in the market. And if it suddenly rallies to 17.55, not good. I think it's going to move lower and the market's going to move higher. Thanks for being here, and stay tuned for Tom and Tommy in the Bull Bear Binary Show. I'll be back at noon.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.